Good morning, everyone, and welcome to the Prince George's Community Federal Credit Union 2023 Financial Webinar Series. Today's presentation is brought to you in partnership with Coffee, a nationwide financial coaching and education center focusing on improving the financial health of individuals. As the premier credit union of Prince George's County, we have joined with Coffee to expand our mission of providing quality financial education to our community and lending insight into credit management, home ownership, and money management. Prince George's Community Federal Credit Union is a full-service financial institution serving anyone who lives, works, or worships in Prince George's County, Maryland. We are one of the county's best-kept secrets, with competitive loan and savings rates, as well as discounts to national retailers. We currently serve over 17,000 members in the area and welcome you to come and experience the benefits of membership as well. Later on in this presentation, we will display our contact information and answer any specific questions you may have concerning your financial needs. It's not too late to invite your friends and colleagues to today's webinar. You should have received an email about 30 minutes ago, and in the email there is a link that you can pass along for them to register and join the call. Please note that today's webinar is live and all phone lines have been muted. If you have any questions, please feel free to type it into the question box on the right-hand side of your menu bar. All questions are private and will be addressed at the end of our discussion. We will be offering a free 60-minute financial coaching session with the completion of 3 webinars. More information will be given at the end of today's webinar. Lastly, a recording of today's session will be available later on today on our website at www.princegeorgescfcu.org/webinar. And with that, I will turn over to Ms. Doris Baker.
Thank you so very much, and welcome everyone to today's second webinar of the webinar series. Let's just start off by talking about 2022. So inflation made 2022 stressful, especially since it followed, all the COVID shutdown and everything, all the years we faced COVID. Now that may cause, that stress may cause your January to be even more stressful than it usually is. And you may ask, why in the world is January so stressful? And it's because that's when the December credit card statements start rolling in. Unfortunately, many of us don't pay off our holiday bills until the summertime. And some of us don't even pay them off when the holidays roll around for the next year. Today, we're going to show you how not to do this. Now, among the holiday traditions in this country is one we shouldn't be very proud of. That one is that we regularly spend more than we have at holiday time. Now, you can see from your screen that it dropped slightly in 2021 from 2020, but some of us still could not have afforded or been able to afford that $1,200 that we most likely put on credit cards. And that's what we're talking about here, credit card debt. Next slide, please. In fact, let's take a few years. Let's look back a few years even earlier. 2015 was the last time our holiday debt here in this country was under $1,000 per person. Now, obviously, we can't keep going on like this. Eventually, we need to change our ways or we're doomed for a lifetime of debt. We're doomed for it. Next slide, please. Let's look at this 28%. And here's the last scary statistic, I promise you. I know I always start out with Debbie Downer, but this is the last one I'm going to hit you with today. And it can be really troubling. And that is because nearly 3 in 10 Americans start their holiday shopping each year, and they still haven't paid off their debts from the year before. To me, that's alarming, but that's a fact. Let's move to the next slide. Okay, after all those terrible statistics, it's all good news from now on. Let's start with this simple fact. Most Americans don't get into holiday debt because they're irresponsible or even frivolous. They go into debt for an easily fixable reason. They just didn't make a plan. Let's talk about how, and let's talk about now making a plan, because making a plan isn't hard to do. You just have to be like Nike and do it. Next slide, please. Now, here's the first rule of personal finance. You cannot, may I repeat, you cannot save money if you don't know how much money you're spending. If you financially survived the pandemic without a monthly budget, you definitely will need one now. That's because it is sure to increase, and that is your spending is going to increase now that we're almost back to normal. I like to say we are back to normal, or whatever normal may be. Best of all, creating a budget isn't as difficult or even as boring as you may think it is. Why? And that is because technology is everywhere and is even here for you when it comes down to my favorite B word, which is budgeting. Let's move on to the next slide. Let's talk about how to budget without getting bored. While now you certainly can go old school and create a budget using your pen and paper, it is so much easier if you use secure online tools that require just a few keystrokes. There are websites out there, there's apps, and there's different types of programs that handle the drudgery of budgeting for you. Many are free, and the ones that charge are only a few bucks. And let me inform you on how they work by moving on to the next slide. Now, one of the most popular is called Mint, okay? This is free. There are others like YNAB or You Need a Budget and Envelopes. They charge a few bucks a month because they offer more options. Either way, you just type in your income and you type in your expenses, and these programs do the drudgery, what I call drudgery. They do the math for you. You can even project your savings if you eat one less takeout dinner or if you refinance your mortgage. The software does the heavy lifting for you. It does all the computations for you. Lastly, since we're talking about how to save money, budget, cut expenses, Prince George's Community Federal Credit Union, say that real fast, okay, offers a popular certificate of deposit. It's called a pot of gold. Now, this CD offers a more disciplined approach to saving, okay, which is the main objective of a budget. Saving for the future while earning above market rates. That's always what you're going to look for when you're saving. Look for the best rate possible, and look, it's right there in your yard. Okay, you simply choose a specific financial goal, 10,000, 5,000, 3,000, and make automatic deposits for a 60-month term via automatic transfers. Now, depending on your personal pay schedule, you can choose to make monthly or even bi-weekly deposits. This offers a faster yet safe way to grow your money and be able to pay off debts and cut other expenses sooner. As soon as this webinar is over, you all need to contact the credit union immediately because this is a fantastic product. Okay, moving on to the next slide. Now, if what we talked about earlier, if that's a little bit too techie for you, then there's a middle ground. There's a middle step. There's websites, and we're talking about the budgeting. There's websites like Tiller. They let you download customized spreadsheets that stay on your computer and you can easily personalize them. Also, many banks, and I know you already know, and your credit unions offer similar programs on their websites for their customers, which are easy to use because you're already familiar with those websites. Each of these options has its pros and cons, like anything else, but they all work. When you visit our website, you'll find a loan and debt relief calculator. When I say our website, I'm speaking of Prince George's website that offers an easy web tool so that you can use it to calculate how much you are able to save by refinancing existing loans or consolidating your existing debt with Prince George's. So it's really up to you, whatever makes you feel the most comfortable. And contact the credit union and just to see how that will work for you. Gerald, did you need to add anything else when it comes to something about the credit union? I didn't ask you earlier, but if you want to jump in. If not, next slide, please.
I'll cover it in the next couple of slides, but we'll come back to.
Okay, sounds good. Okay. Create another budget. I know what you're probably thinking. Oh my goodness, is not one enough? Well, let's talk about that. Now that you understand the value of a regular old household budget, let's take the next step and talk about emergency budgets. Yes, there is another budget. What's an emergency budget? It's a stripped down monthly budget, really stripped down from all the bells and whistles. We're talking about cutting out every expense that isn't needed for your basic survival. Come on here. If you get laid off or lose your income for more than a little while, you need to know in advance, right? In advance, proper planning, how much it will cost you just to survive those difficult times. Without an emergency budget, you're flying simply blind, okay? Emergency budget, let's keep it going. In an emergency budget, you focus only on the expenses that matter most. First, there are your basic needs. We all know what those are. That's food, that's water, and that is shelter. Second, there are bills you just have to pay. That's your mortgage or rent, other loans, your utilities, your water. You get the idea. Although we'll talk in a moment about how to delay or reduce some of those bills, but you still have to pay them, right? Then there are support functions that you cannot live without. For example, if your car breaks down, you need to fix it. Or if you can't get to work and make enough money to survive if you don't get that car fixed, right? Same thing for childcare. Finally, there are medical expenses. This includes your prescriptions and any medical care that you're under, because nothing else matters if we're so sick we can't get to work or even simply enjoy life. Okay, next slide, please. Once you prioritize the 4 broad categories we just mentioned, it's time to cut back to the barest of bones. I know we don't want to hear that, but it's time to do it. Since we're talking about keeping only the necessities, we're going to get rid of everything else. That includes pausing or even canceling monthly subscriptions like cable, let that marinate a little bit, or satellite TV. I know. That's right. It also means no Netflix. Yeah, and you'll scale back on your phone plans to the very cheapest level available. Yes, that's what we'll do. Ditto with your Wi-Fi. If you can get a cheaper rate for a slower connection, you'll build that into your emergency budget, because guess what? Every single penny counts. So the objective here is for everything that you're cutting out and you're cutting back on that you would normally pay, then you will go ahead and shunt that right over to a savings account. In fact, your emergency savings account. Next slide, please. Now, before we go any further, let's just clear the air, everybody. Woosah, just breathe. While emergency budgets, they really are fun, they don't have to be miserable either. Just because you cut out on your costliest entertainment options doesn't mean now that you cannot enjoy yourself and enjoy life. You and your family can enjoy board games. Come on, some time together, and even go outside and take a walk or take a hike, ride your bikes, just build memories. Your local library has both online and even still socially distant in-person options to keep you entertained, both you and your family. And while you're being entertained, you're going to gain some education as well. So bottom line here, helping your bottom line doesn't mean that you're going to live like you're in seclusion somewhere, like a monk or something. You're able to get out and just create some fun activities that don't cost any money. Next slide. So let's talk one more thing or two about an emergency fund. Now, financial experts recommend you save 3 to 6 months of bills and other budgeted expenses. This allows you to weather a period of unemployment or cut hours at work without relying on what we're talking about here today, and that's credit cards. Of course, who has money just lying around? But one easy way to start an emergency fund is to let someone else do it for you. If your employer pays you via direct deposit, and the majority of us, I think it's about 82% of Americans, get paid via direct deposit, then you can ask them to split your direct deposit. That's right. Most employers will let you send some money to one bank account and some money to another. So you can shunt some of your paycheck directly into a separate emergency savings account. And guess what? The power of the human mind. You won't even miss the money. I'm a living witness. That is my testimony, because you'll never see it in your primary account. So this is something, if you're not doing it, this is something that would be real good to do. Next slide, please. Now, you're probably wondering why we've spent so much time with this emergency stuff, right? Well, when you're trying to go into the new year with the better financial plan, thinking about the worst that 2023 could throw at you, that'll keep you prepared for anything. It's also true that taking control of your finances can make paying off holiday debt much less daunting. In fact, why don't we go ahead and talk about that for a moment by moving to the next slide, please. Now, remember we mentioned about the 28% of Americans who had not paid off their holiday debt from the previous holiday season. If that happens to be you, okay, getting out of debt can be a little bit harder than it was getting into it. So here we're going to recommend some free professional help for you in order to assist with that. If you have those steep and stubborn holiday bills, that's really a symptom of a larger problem, of a much bigger problem. So the first thing you need is a debt diagnosis, let's say. You don't go to a doctor, though. Instead, you're going to call your certified credit counselor, which is your coffee coach here at Coffee. Now, these experts work at nonprofit credit counseling agencies, okay? While they have you on the phone, they will counsel you, give you an interview, let's say, regarding your finances, and will provide you with a free debt analysis. They'll review every dollar you have coming in, and they'll also review every dollar you spend. And from there, they can give you a menu of debt busting options. Next slide, please. Now, one of the most powerful weapons in a credit counselor's arsenal is something called a debt management program, or you may hear people say DMP for short. Now, this type of program might be able to cut your monthly payments, your monthly credit card payments by 30 or even 50%. And you're probably saying, what, where is it? How can they do that? And it's simple. Your credit counselor works directly with your credit card companies. A DMP has several wonderful advantages over trying to get out of debt yourself. And we're just going to talk about a little bit of it. And next slide. Okay. Not only do you save money on interest rates, a DMP also freezes late fees. Even better, you only make one payment a month for all the credit cards that are enrolled in the program. You make that payment directly to the credit counseling agency, who pays your creditors on time every time each month. So there's no more forgetting to write that check for that one credit card than getting hit with those enormous late fees. No need to worry about that. Next slide, please. So obviously there's much more we could say about DMPs, but your best bet is to read more on your own and at your own speed. So I want to invite you to visit your Prince George's Coffee portal. You should see the email address there on your slide, and you can even call them, okay? And get some more information in regards to a DMP. But also with that call, you're going to receive that free debt analysis, and that credit coach or that coffee coach is also going to provide you with some debt busting solutions based on your particular financial situation. Okay, next slide, please. Now, of course, creating budgets and calling credit counselors is a wonderful way to get out of debt and stay out. But there are 3 other tactics you can use right now to make a dent in your holiday debt. And let's go from easiest to hardest, okay? But right now I'm going to have Gerald to come on board to talk about debt consolidation or balance transfers. He's going to talk about something that Prince George's offers. Gerald?
Yes, we currently have 2 different campaigns going on. One is for balance transfers on credit cards, and the other one is a debt consolidation campaign. But I'll touch on the Visa balance transfer for now, since that will be the topic for the next couple slides here. We have our balance transfer campaign that is running for the year of 2023. You can get, right now, our interest rates for any balances that are transferred is 1.99% APR. And there are no balance transfer fees. There are no annual fees. We offer some of the lowest rates, and you also have worldwide perks. You could visit our site at www.princegeorgescfcu.org/visa to to learn more. And we also have some very cool rewards, credit cards, and other benefits. So I would encourage everyone to check out that campaign, especially with the way the federal government is raising interest rates. You're looking at some very, very high variable interest rates in the near and short-term future. So if you have a high balance on any credit card that you might be trying to or struggling to pay down, I would highly recommend that.
Okay. Thank you so much, Gerald. So we're going to get back on track here with number one, sweet talk your credit card companies. Now, if you've had your credit cards for a long time, we're talking about years now. We're not talking about just a few months, and you've made your payments on time, then you can actually ask for a break. That's right. You can call the number on the back of your card and request a slightly lower interest rate. Of course, there's no guarantee you'll get it, but credit cards, they're a competitive business. And especially right now, as Gerald spoke about the rising rates. So they often don't want to lose you as a good customer over a fraction of a percent. And you can easily move your due date to avoid late fees. Listen, I've done both of these, and I'm here to just say that seems like since COVID, creditors are much more open to working with their clients, okay? Moving on to number two. To our next slide. Get a balance transfer card. Now, as Gerald stated about Prince George's offer for the balance transfer cards, let's just talk a little bit about them. That's a certain kind of credit card that can actually help you get out of debt instead of going deeper into debt. Okay, that's the purpose really of a balance transfer card. These cards offer you a low interest rate, and in many cases, no interest rate at all. With one of these cards, more of your money goes to paying down your balances instead of lining the pockets of your credit card issuer. And you may say, well, that sounds too good to be true. It's not, because they're really out there, but there are some drawbacks that you need to watch out for when it comes to balance transfer cards. And let's talk a little bit about that as we move to the next slide. Now, one thing you need to know, all balance transfer cards have what is called an expiration date. Usually at the end of 18 months, could be longer, but sometimes for as short as 6 months. Now, if you use that time to pay off your balance, you come out way ahead. However, and unfortunately, research has shown that most Americans who get a balance transfer card, we don't pay off that entire balance. And then you want to guess what happens, right? That interest rate jumps, and most times, or sometimes, it jumps to a rate that was higher than the rate you transferred from. So with a balance transfer card, we have to be disciplined and strategic, okay? And we have to make sure that we recognize that expiration date. So make sure you look at the small print. Let's move on to the next slide, please. 3 other ways to ease your post-holiday debt. We talked about debt consolidation. Gerald's going to come along and talk about it a little more, but let me just preface him with this. A debt consolidation loan is simply a personal loan you use to pay off all your credit card bills that have those steep interest rates. The concept of the debt consolidation loan is the same as a balance transfer card. What you're doing, you're paying off the high interest rates with a lower interest rate, excuse me. In this case, you might be able to get a personal loan between 36 and 60 months from your credit union. And it's going to be a lower interest rate than your credit card. Maybe I'm not even going to quote the interest rate that I have here because I know that prime has gone up. But the concept is it's going to be lower than a credit card interest rate. Then you're going to use the funds to pay off your credit cards that are charging you the much higher rates. You're simply going to make one monthly payment on that personal loan, and it usually gets you out of debt faster, and you make a smaller monthly payment. That's a win-win situation. Okay, let's turn it over to Gerald to talk about Prince George's debt consolidation loan.
Yeah, so the second campaign we have going on that's running until March 31st of this year, something called our Map Your Journey campaign, and it's all about freeing ourselves from financial debt this year. So if you wanted to check out that campaign, you can go to princegeorgescfcu.org/mapyourjourney, and on that page, you'll find a list of options of things that you could reach out to us if you're interested in learning more about budgeting or debt management. And at the bottom of the page, there is a really cool tool that we like to use here, our debt calculator. It allows you to put, your total debt or any kind of debt that you're trying to get rid of in that calculator. You can choose the interest rate. You can choose the term of the payment. It's really all-encompassing as far as the debt calculator goes, and it's one of the few I've seen that work this efficiently on the entire internet. So I would definitely recommend going to that and visiting that campaign and just using it. Even if you don't use the services that we have, try out the debt calculator. It's definitely a great money-saving tool.
Great. You all are truly blessed to be clients of Prince George's. I tell you, they have some wonderful offers. Let's move on. We're going to talk about, we want to give you a little warning when it comes to debt consolidation loans, okay? Debt consolidation loans are great. If you get a debt consolidation loan, you're looking at 3 to 5 years to pay it all off. But here's the thing, that's if you can even get a loan. Now, if you have too much debt, it's what we like to call a classic catch-22. You need the loan to pay off your debts, right? To pay off those high interest credit cards. But you have so much debt, no bank or credit union are willing to take the risk to give you that loan, okay? So that's the thing about a debt consolidation loan. If you can get one, go for it, but you could run into trouble, okay? Let's move on to the next slide. And Gerald, I believe this is where you would come in to give your members some information. So that's all I have for today. Thank you all very much for your time.
Okay, I see we have a few questions, and we'll get to those in a second. But I want to thank everyone for attending today's webinar. Again, if you want to learn more about Prince George's Community Federal Credit Union, or if you want to speak to a member service representative, you can visit www.princegeorgescfcu.org, or you can call us at 800-952-7428. I want to once again thank our presenter, Ms. Doris Baker, and Coffee for their continued support. We are also inviting you all to schedule your free 60-minute financial coaching session, and you could reach that number at 866-459-5165. And with that, I'm going to open the floor for questions. I see a few here. Let's see. Oh, Carla Cash says, great session. Thank you for that. Colette Gilchrist, I hope I'm saying your first name right. She says, once you submit your application for debt consolidation, how long does it take for you to receive a response? And I'll answer from my end. Here at Prince George's, we typically have our member service representatives reach out the next business day because of how they process the leads that come in. You normally hear, if it's not the same day, it's within 24 hours. It doesn't take very long at all. Anonymous question here. Oh, go ahead, Doris. Yes,
No. I was going to say, and if you're not a member with Prince George's, you would have to reach out to whatever financial institution that you were applying with to find out their timeline. But it is relatively short for a personal debt consolidation loan.
Mm-hmm. Okay, so does PG have an expiration for the balance transfer card? An
Good
expiration.
question.
As far as I know, we do not. And I could get you more information on this question, but I would say no. I've been here for 4 years now, and I would say no to that question. Those balance transfer cards is a very, very useful tool. Once again, like I recommend everyone checking that campaign out and those offers out. And it looks like that might be it for questions. You had anything else you wanted to say, Doris, before we close out?
No, just thank you all for the opportunity to share financial literacy. We really appreciate it.
Okay, and with that, I want to thank you all and wish you all a happy 2023 and to have a great day. Again, you can sign up for the remaining webinars at princegeorgiacfcu.org/webinar. There are 2 remaining in the month of January, and after that, they'll all be on demand on our Vimeo webpage, which also links to our webinar landing page. So once again, thank you and have a great day.
Have a great day, everyone. Bye-bye.